Very good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to System Trading using Amibroker. Now, this is an introduction level tutorial for the users who are using Amibroker for the very first time and those who want to learn particularly about the backtesting, especially those who are kickstarting their trading career in systematic trading. So in today's agenda, we're going to learn backtesting in a cash market, particularly how to deploy a cash market trading strategies and how to backtest a trading strategy in a futures trading environment, particularly how to implement in a leverage trading, like how particularly something like futures market, how to implement those things. So those are the two major agenda. And along with that, we're also going to discuss the importance of backtesting and why Amibroker for backtesting. So these are the key topic that I had chosen to kickstart. So before getting into the session, just give me a quick confirmation about the audio and video quality so that we can quickly kickstart with the session. All right, great. Thanks, Ram, for confirming. And thanks, everybody. Thanks, Jignesh, Santosh, and Rajiv. So without any further delay, we'll quickly kickstart. First of all, I want to tell you why Amibroker. So here I'm having Amibroker. The Amibroker latest edition is what I'm just having over here, right? So I'm using 6.39, by the way. However, if you don't have Amibroker, you can straight away go to amibroker.com. So from the amibroker.com, you can download the latest version. If you are already a license holder, if you don't have license, still it's fine. You can still download the Amibroker 6.0 official release, and this comes with the lifetime license, and it includes almost 95% of the feature. You can do the complete backtesting functionality can be used over here. Even you can also do live trading, live automated trading. Everything can be done over here. Now, first thing is like many people's question I would like to address here. Does backtesting is essentially a necessary component? Right, so that's the main question majority of the trader they do ask. Is backtesting results, does it guarantee the future results? So these are the two questions. So what are those questions? Number one question is like, is backtesting is necessary? Is backtesting is necessary? Okay. And number two, is backtesting results are the indication of futures, indication of future outcome. If you ask me if backtesting is necessary, then I would say like it's a strong yes. It's a strong yes from me. The reason is, without backtesting, we cannot understand what kind of risk is involved in any trading system. See, why we do backtesting is not to figure out whether the strategy is profitable or not, though that's another motive. Yes, how it performed in the past. The major motive is to understand how much risk averse your systems are. I mean, how much risk management is in place. When things are going wrong, when there is a worst case scenario, what kind of losses a trading system is giving, so that how much capital I can manage. Yes, obviously, whether the strategy is profitable or not, that is the second criteria. But the topmost criteria is to understand what kind of risk is associated with that. Is the strategy is good in delivering consistent returns? Are there any surprise element? If there is a surprise element, what is the surprise element? Why that strategy is losing? His strategy is performing good in a low volatility condition and also in high volatile conditions. If the strategy is not performing in a high volatile condition, then what kind of steps I should make? So it helps you to study your own trading rules and to make a better trading decision. Definitely, yes, backtesting is very, very important. If in case tomorrow, if you want to fine tune your trading system, you want to build a better trading system, without backtesting, right? We cannot build a better trading system. Number two, Is backtesting results are the indication of the future outcome? Not necessarily. As I said, backtesting we are trying to do only for two reasons. One is for fine tuning the trading systems, or to build a better trading systems, and also for risk management, so that your losses will become smaller and your the strategy will be focusing more on catching the trend as much as possible. Now, today's topic itself is all about system-based trading, right? So maybe for the beginners, maybe if you had started your trading career very recently, why to do a system-based trading? This is one of the most question maybe you might be bugging. So many people might be thinking, like, if I do system trading, maybe it's more of a scientific trading, I can make a lot of money. If you are coming up with that kind of intention, absolutely it is a wrong idea. I could say that. System traders, first of all, I'll tell you why I get into system trading. I want to get into a disciplined manner. And irrespective of whichever the side market moves, I want to follow the technical rules. And on top of the technical rules, I want to grab my edge in the markets. Okay, so the primary idea of system trading is to bring discipline in the trading itself. Because a discretionary trader, if they are coming into the market initially, they will struggle a lot to find a disciplined approach in trading. Very difficult to approach the market in objective manner. All of a sudden, there'll be a lot of news will be happening. Fed will be doing something. GDP numbers will be coming in, right? So GDP numbers are there in the next 7 days, right? So a lot of media talks will be there. When a lot of media talks are there, noise on the social media, it's very difficult to take an objective decision. Particularly if you are a young trader who are just kickstarting your trading career and you are 1 or 2 years old in the markets, very, very difficult to maintain objectivity. We know that this is the rule. There are times, even though we know that this is the rule, it will be very difficult to pull the trigger. So that is the problem. The system-based trading, aka rule-based trading, solves most of the time. And of course, Amibroker had done a fantastic job over these years. In fact, Amibroker is not new to backtesting. It's been there since 2000 onwards, more than 20 plus years old software now. It's a Poland-based company, but tons of development has been happened in Amibroker, right? So many people, they move towards Python kind of things. Yeah, it looks fancy, but then Amibroker is totally robust when it comes to backtesting or optimization or walk-forward testing or automation. So you name anything, Amibroker is still a pioneer and it's robust. I can show you how robust is Amibroker when it comes to backtesting. And you can compare with yourself if you are using a Python-based trading tools. So what I'm going to show you today is how to build a system in Amibroker and how to backtest it. How to do a simple backtesting. That's what I'm going to explain here. So to do that, first of all, I'm going to take I'm going to go to the 10 years of, not 10, but yeah, almost 10 years of intraday data. I'm going to switch over. Let me move to the 10 years of intraday database. I'm just maintaining a separate database here. So it's IUOD Futures July 2021. So this database contains intraday data in Nifty, right from, it's a 1 minute data, right from Jan 2021 till July 2021. So approximately 9.5 years, 10 plus years of data, right? So almost 10 years of data is there. To backtest an ample amount of 1 minute intraday data it is. So it's pure intraday data, 1 minute data it is. Right, so at such a granularity. Now the definition here is there any simple system I can create so that I can backtest the trading strategy? Let's say I'll take a simple example like maybe something like HDFC Bank. Let us say I want to create a trading strategy in HDFC Bank. A simple trading strategy which can be used on stocks like HDFC Bank. So is there any way where we can design a trading system? Something like, let's say on a hourly time frame, I'm just trying to figure out what if it is, I'm just trying to use a simple moving average. What kind of results I will be able to get if I am running it on a hourly time frame, only long only. I'm going to enter long, I will exit long. That's it. No short signals, nothing. Because you know that if you are building any trading system on cash only markets, you can only go long and you cannot go short. And moreover, if it is a hourly strategy, moreover, you cannot carry forward shorts in the cash markets. So though it is a future charts, I'm going to show you the demonstration of how to backtest in a cash market trading environment. So first of all, to build a trading rule in Amibroker. So what kind of skills are required? Nothing much, a basic understanding of technical analysis. Definitely it is required. Once you have a basic understanding of technical analysis and some logical ideas, how to build a trading system, how effectively manage the risk. So all such kind of common sense is what it is required on top of that. Then coding will be very easy. Coding is the easiest part in Amibroker. Yes, you can build simple systems, you can build complex trading systems. Any kind of complexity in Amibroker can be built in. Any kind of simplicity in Amibroker can be built in. So let me quickly go and build a trading system using the formula here. So I'll go to the file, new formula. So from this space, I'm going to write a simple trading system. So what is this trading system? Trading system here, I'll try to write it out over here. So trading system is nothing but a rule-based approach. It's more of a rule-based approach to buy or sell a security. And yes, it can be automated. You can also do in a semi-automated form also, like when signals can be generated and you can go and punch orders manually. Or it can help you to identify the conditions. Whenever the trading conditions, your trading conditions are met, it could show in front of your eyes. Then you can take a subjective, or you can take an human-based trading decision, whether you want to go with that or not. It can be an assistant in helping you to determine whether to buy or sell a particular security or not. Is it the right time to approach buying or selling at this point in time or not? So the next thing is like automation. You can also perform a complete end-to-end automation on top of whatever the code you're writing. You write the rules, when to buy, when to sell, when to short, when to cover. And on top of that, it can be connected to your broker to a complete end-to-end automation. Amibroker is totally capable of doing all those things. The best part is you have to focus only on your trading system. You have to focus on your results, fine-tuning, and that is what you have to focus on. Rest, all those things are doable. You don't need to worry about lot more coding stuff in Amibroker. All you have to do is how I should build a trading system. Now, talking about building a trading system, as I said, it's pretty easy to build. When you are starting with any trading system, right? So here, you have to come up with a simple blank module. So section begin and section end. I'll give a name to that trading system. I'll say like maybe a simple Donchian channel trading system. Simple Donchian channel trading system. So, a simple Donchian channel based trading system is nothing but the high value. It has two channels, upper channel and lower channel. And we want to plot the upper channel and lower channel, first of all, on top of the candlestick. First of all, I need candlesticks. So candlestick with axis. I'm bringing the candlestick with axis. These are very common thing. Almost every code I've been writing, I need this particular code block. This code block will give me the candlestick. So if I save the code, I'll apply the code. You can see that it plots the candlestick. It plots the candlestick over here. It draws the axis. That's what the code does. Now, on top of that, what I want is like I want to compute the upper channel and lower channel. So here I'm going to use a variable called upper. A variable is something which can be used to store the data in that particular information. So in this variable called upper, we can store the Donchian upper channel. I'm going to store the Donchian upper channel over here. So let us say it's nothing but a higher high value. You see that HHV, the moment I type HHV, it points out automatically. It's called IntelliSense. Automatically, it detects that there is a inbuilt function is there. There's a small f. You can see that that's nothing but a blue color function, which is an inbuilt function supported by Amibroker itself. Anything which is in blue color, they are inbuilt function over here. So like Excel, maybe you know that what is a function. If you don't know what is a function, I'll go and show you from Excel. Maybe if you are already an Excel user, you know what a function is all about. So here I'll show you what a function is all about. Let us say I'll go and open a blank workbook. And here I'm going to bring a simple function. Let's say I'm having value 10 and 20. And third one. So here I want to say like equal to sum of. Here, you see that the moment I type sum, it is automatically instructing me. Like it is one of the function. It's an inbuilt function in Excel. So here I can pass the arguments. So what are the arguments? Arguments are the values. So here I'm passing the 10, I'm passing comma. This is the first argument I'm passing. And here I'm passing the second argument. I can pass as many arguments I want. The function supports. It is capable of supporting it that way. So two arguments I'm passing. And I'm just entering over here. It sums up the value and gives me the output. So what is a function basically? A function, it always does a particular operation. What it is programmed, it will do that such kind of operations. It takes arguments. A function, it takes arguments. Maybe we can call that as argument 1 and argument 2. It takes as an input. It takes as an input and throws output. You know that argument 1 is 10 here. So this is 10 is the argument 1 and 20 is the argument 2. And output is nothing but 10 plus 20, it becomes 30 over here. Right? So likewise, the same thing is happening in Amibroker also. It's nothing much complex over here. So we are using a simple function called HHV. HHV is a simple function. Then it is asking me to fill the array and range. Array is nothing but a data set. Let's say I want to send the closing value of the data. And I want to say like last 20 bars is a look back period. So here what I'm saying here is compute the higher high value of the closing variable, or maybe not the closing variable, maybe we'll take the higher high value for the last 20 bars. And store that value for each and every bar under the variable upper channel. And then I'm going to do a similar thing for lower channel as well. LLV of low, 20. Okay. So thereby I'll be able to compute the upper channel and lower channel level. So this is nothing but the Donchian channel, right? So computing Donchian channel. After computing a Donchian channel, maybe I want to give 1 bar delay. Give 1 bar delay. I want to compute the values 1 bar delay. So what I am going to do here, I'm going to use upper equal to reference of upper comma minus 1. So this will give me 1 bar delay over here. This always refers 1 bar back. So always the upper channel and lower channel will be computed on the close of the candle only. That's how I've been programming it over here. The reason why I'm doing here is I'm just looking for I'm going to look for a breakout levels. So if I'm going to look for a breakout levels, in this specific case, I have to look for a 1 bar delay over here. Then lower channel comma minus 1. You can see that I'm also giving a comment over here, / as a comment. So these are nothing but what? These are specifically nothing but comments. I can give a plain vanilla English comment. Why I'm giving all those comments? So that tomorrow, if you open the code, you know what the code is doing. This may not be a powerful one if your coding line is like 10 lines or 20 lines. But tomorrow, if you want to do complex codings, right? So like 300 lines, 500 lines, 1000 lines. When such kind of coding levels are increasing, you will get at times bit difficult for you to understand what you had done. So after you open the code after 1 week later, then you'll be finding a little bit difficulty what you had done. So it is always a good coding practice to explain parallelly side by side with the comments that what you had done. It's a very good coding practice. Almost every popular coders, they use this kind of simple technique over here. So that even if tomorrow, if your friend is opening or if your colleague is opening, trying to open, he will try to understand what you had done with the code. All right. So also, whenever you're using any variables, try to use some meaningful variables over here. Some people will be using like A, and then some people will be using B over here. This will not be a meaningful one. So rather, and tomorrow if somebody is trying to open, they will get confused. What is A and what is B? So try to give some meaningful variable name as much as possible. So I had done the computation, I had given the bar delay. Now I'm going to plot those values. So to plot the values, there is a plot function is there, plot upper. And then I'm going to say like, I'm going to give a name to that. I'm going to give a simple name saying like upper channel. The next it is asking me for the color. You can see that the color is getting highlighted. I'm going to say like color yellow. And next it is asking for a style line. So style equal to style line. That means it is an optional variable. If I am not specifying that, automatically style line will be plotted. It will be plotted with the line automatically. Or I can also say like style tick. The moment I type style, automatically it gives me the list of styles available in Amibroker. What I want is style tick. So that is, it automatically try to give the possible values. That is called IntelliSense. So that will help you to code your strategies a bit faster. Even if you are a learner, definitely this kind of IntelliSense kind of approach will be helping you to code your trading strategies faster, a bit faster. So let me save the code. You can see that the channel has been built. Here is the channel. The channel has been built over here. A very simple approach that we had done over here. Now we are looking for a breakout. Now I'm going to write my own simple trading conditions over here. Now on top of this channel is what I'm going to write my simple condition. My condition is like if the price is breaking or if the price is touching the upper channel, it should be a buy. I want to buy it. Or if the price is touching the lower channel, I want to sell it. So I'm going to write a condition over here, buy equal to. So here I'm going to write a condition. When I say condition, I'm just looking for a touch of a level. So how I can look for a touch of a level? It's pretty easy. I'm going to use a crossover, cross function. A cross function will look for a touch between two different data set. One of the data set is high of the candle. Is it is coming and touching the level upper channel or not? Upper channel. Here I'm just looking for a positive crossover or positive touch. The level, the high of the candle should come and touch the upper channel. We can call that as a positive crossover. So wherever it is touching, it's going to maintain the value true. Which candle is going to touch? It's going to maintain true. Which candle is not going to touch? It's going to become false. So let's say the candle is coming and touching. Imagine what is going to happen over here. This part, if you understand, you can easily go through what Amibroker is capable of doing. You can build any kind of complex trading strategies. Let's say we are having multiple candles, candle one, and we're having lower channel as well. Okay, candles are keep on going and it's touching over here. This is the part, or maybe even it could come and touch. A touch can also be like high of the candle and something like this, also a touch only, because high already touched that level. So here there is no touches. Wherever there is no touch, it maintains a false. What will be maintained false? The buy value will be false for each and every bar, and it maintains true where the touch is happening. So here the touch happened, right? So the positive touch happened. Why not I'm using close over here? Because whenever you want to look for a touch of a certain level, then highs and lows are highly preferred. Because sometimes the close of the candle, if you are using, it might touch in the 3rd minute maybe in the 4th minute or 5th minute, it could withdraw and signals will appear and disappear. To avoid signals appearing and disappearing during real time, we just simply go with the highs and lows, particularly whenever we are planning for a touch-based trading system. Not every trading system is a touch-based trading system. This particular case is a touch-based trading system. So one have to use a highs and lows in their strategy rather than using the close of the data. That's the reason you can see that most of my strategies I'm using highs and lows instead of using the close of the candle. If you're using the close of the candle, then you cannot build any touch-based trading systems. It will be close of the candle-based trading systems. Candle closes, then only the confirmation buy or sell signal will get confirmed. Here, in this approach, when the touch of the level is done, automatically signals come in real time. It stays in real time. Signal will not get disappear at all. Again, rest of the candle, it will be maintaining false. Again, it will be false and false and false. So that's what the buy condition will be. In case of sell condition, let's say, sell will be maintaining false. Maybe I'll put in a different color. It will be maintaining false. This is a sell side array. I haven't written a sell yet. But let's say when the candle is coming and touching, that is the point it turns true. That is the only point it turns true. Rest all the cases, it will be maintaining. That's the only point it maintains true over here. Rest all the cases is going to be false. That's what we call as an array. For each and every bar, it will maintain the value. It is not a regular variable. It is not going to store any particular number alone. It's going to store the values for each and every bar. Every bar it will store, whether it's true or false. For each and every bar, it will store that information under the single variable called buy. And likewise, I'm going to do the same thing for sell also. I haven't written the sell yet, but now I'm going to write it out. Sell is nothing but crossover of lower comma low of the candle. I'm just looking for a lower touch or negative crossover. I'm not looking on a close of the basis. I'm looking for a touch level, touch basis. I'll make it like touch of a level. If that level touches, it generates a signal. Touch of a level. So this is our trading rules. So here is our trading rules over here. Trading rules. Now, if you are writing any trading system, the trading rule plays a vital role in determining your profits. Not only trading rules, it also comes with the execution rules also. So execution rules. So far I had written the trading rules. Trading rule talks about when to enter, when to exit. When to enter and when to exit. However, next part is the execution rules. Execution rules. This execution rules talks about at what rate to enter and exit, at what rate to enter and what rate to exit. In Amibroker, this is very, very important for backtesting because that is the price it is going to use it for the entry price, and that is the price it is going to use it for the exit price. This is very important parameter for backtesting. Remember, it is an important parameter for backtesting, not for live trading. Live trading execution rules could be slightly different. You have to write the execution rules in a slightly different manner from a live trading perspective, live automated trading perspective. But if you want to generate an idea, like you have already having an idea, you already convert that into a trading rule. You also need to write your execution rules also. So it's very easy to write execution rules in Amibroker. Let's say I'm going to say like buy price. I'm going to say like, I'm going to say at what price I want to buy when this condition is happening. When this condition is happening, my entry point is exactly at the upper level, right? So in that case, what I'll say like value when an event is happening, when buy signal is happening, get me exactly at that time, what is the upper channel level, get me that point, that will be my entry price. That is going to be my entry price. So likewise, I'm also going to say my sell price as well. Sell price is also nothing but a value when When sell signal is happening, by that time, what was the lower channel? That is exactly going to buy my exit price. And then I'm going to plot the signals as well. So I can go to trading system. I'm going to say like trading signals. So which will plot the buy and sell arrows side by side. So this is more of a visual information. The buy and sell arrows, which I'm going to plot. So whenever there is a buy, you plot the arrows. Whenever there's a sell signal, you plot the arrows. Kind of a custom designed arrows here it is, which I do use it on my every strategy. So let me save it. Now I'll go and apply it on the screen. So now we can see that a lot of signals are getting generated over here. So whenever the conditions are touching the upper channel, it is touching here also. It is touching in this bar also. Whenever the upper channel is getting touched, it is generating a buy signal. However, I don't want the multiple buy signal to be getting generated. You can see that a lot of buy signals are getting generated. I want only the very first buy. I want to ignore all the other buys. And there is a true and true and true. Buy is kept on maintaining true. I want to ignore it until the next sell signal is going to happen. And that is very easy to do that. It's very easy to ignore multiple buy signals. And we can take the only first buy signal. How we can do that? There's a simple function called xrem. So it's all about knowing the function, how to use that function. So here I want to rewrite my entry and exit point over here. I want to say like, I want to simply say buy equal to xrem of buy comma sell. So this will do what? This will remove excessive signal. Remove excessive signals. If there are multiple buy signals are there, it will remove it and keeps only the first signal and eliminates all the subsequent signals until the sell signal happens. So that's what it means. My new buy signal is nothing but if there are multiple buy signal, remove that and keep the first buy signal until the next sell signal happens. Likewise, I'm going to say sell signal, my newly formed, I'm already created a sell rule. I'm modifying my sell rule saying like, hey, what are the signal which formed? Remove multiple sell signal until the next buy signal happens. Now, if I'm going to do that, automatically it will do what? It will try to remove excessive signals. Only the first buy signal and first sell signal will be always restored. And that is very much essential when it comes to live trading also. Live trading or for backtesting, proper backtesting, proper execution, such kind of cleanups are always required. Though Amibroker is a bit smart, even without doing XRM also, Amibroker in backtesting, it will eliminate multiple buy signals in the backtesting. Okay, so here what I had done, I just saved the code. I'm going to save the code under a new formula, file save as. I'm going to put a new folder. I'm going to say like Amibroker backtesting. I'm just creating a folder name called Amibroker backtesting. And inside here, I'm going to say like a simple Gaussian trading system. Okay, I'm just saving that file with a name, the extension .afl. AFL stands for Amibroker formula language. Whatever the code that we are writing is a simple programming approach, very easy to understand, plain English, nothing much complicated. And if you are a beginner level trader, it is very easy to create such kind of trading system. You can create investing models. You can create trading models, intraday models, positional trading models. So you can run portfolio-based trading strategies, momentum strategies, mean reversion strategies, seasonality models. So a lot more style of trading approach we can build using Amibroker. Okay, so I think the code is a bit readable, right? It's not a complicated code. It's a bit readable. And if you are organizing everything in a clear manner, then your coding will be easy to read and understand. And a couple of things I'm going to add over here. Still, the trading system is not complete yet. One more part of the execution rule is when the signal is happening, do you want to immediately buy? Do you want to give any delay or not? So there's one more function called set trade delays. Set trade delay. Here, it is asking me to give, is there any delay you want to give? Do you want to, when the signal is happening, do you want to immediately want to execute it? Or you want to give 1 bar delay or 2 bar delay? How many bars you want to give a delay? If you don't want to give a delay, you can just simply say 0, 0, 0, 0. Okay, that's an essential part. If you don't want to give a delay, in my case, I don't need to give any delay. So I'm going to say like no delay in entry and exit. It's an optional parameter. If you don't want, you can skip it, but it is a good coding practice to say what kind of delay that you are giving in your code. And this is also purely for backtesting purpose only, not for live trading purpose. It's purely for backtesting purpose only. Some people very often confuse with the backtesting part and live trading part. I guess this one will be giving you greater clarity. So all these execution rules which I am writing are only for backtesting purpose only. All right. That means what? When it comes to live trading, the same execution rule we have to write. We have to explain to the broker in a different manner using APIs. That's totally different. Here we are explaining only to Amibroker. Hey, Amibroker, this is my entry. This is my entry price. This is my exit price. So whenever you're building a report, take this condition and accordingly fetch the entry price and exit price. And don't give any trade delays. All these functions, all these commands that we are giving to whom? We're giving to the Amibroker backtesting. So that Amibroker properly and gives the entry price and exit price, it gives you the proper result. If you're giving some other results, then your backtesting could be easily flawed. The backtesting will be looking super good, but at the end of the day, it is not a right approach. So remember, how much ever the trading rule that you are writing, it is more important to focus on the execution rules also, because execution is also going to give a lot of edge over the long run. It doesn't matter what trading rules that you are using. It always matters what kind of execution that you are using. So a simple execution could easily change the game of the entire backtesting scenario, right? So the system is built now. Now only one more thing that I need to add. I also have to say to the trading system, to Amibroker, how much quantity that I want to buy or sell. Every time, whenever the signal is coming in. So we brought the signals, right? When the signals are there, now how I am gonna bring these, how much quantity I'm gonna invest when there is a signal is gonna happen. Whenever there's a buy signal is gonna happen, how much quantity I'm gonna invest. There are various types of position sizing are there. So to explore, you have to go start with set position size. Is a function again. You can see that it's in blue color. Here, I'm going to say like fixed quantity. Let's say like I want to invest always 1 lakh rupees every time. So I'll say like 1 lakh rupees, which is like 100,000 every time in terms of money. So I have to set the position size. There are different methodologies are available here. So you type SPS, you will get different types of methodology. In my case, it is more of a fixed money. So I have to choose SPS value. So always it will try to invest 1 lakh rupees worth of shares. It will try to buy all the time. Then what else? So save the trading system. I'm going to now, system is backtestable now. So how to backtest the trading system in a cash market? Assume that it is a cash market data point. I'll send it to analysis. Now from the analysis, what I am going to do here is, the moment I click on analysis, automatically a new window will open and it automatically sends to the analysis over here. And I have to do the backtesting settings now, particularly for the cash market. First, I'll do it for the cash market, and then I'll do the same thing for the F&O market as well. So that will be very easy to understand, so that you can go back and backtest any trading systems. The best part about Amibroker is tons of trading systems are already available open source. In fact, I have my own market calls library. Later on, I'll share you the link as well, where you can go and find such kind of links. So I'll go to settings. I'll say like I want to run it on a hourly time frame. Okay, so this is a backtesting setting. There's a small spanner icon. So you click on that, automatically an analytics settings window will pop up. So here you enter the periodicity as hourly, which time frame you want to test. The best part here is you can go and test in any time frame. You write the code once and you can reuse the code in any time frame. You can test the same code in 15 minutes, hourly, daily, monthly, weekly. There is no restriction on that. Even if you want to select any custom time frame like 7 minutes or 12 minutes or 25 minutes, there is no restriction over there. Amibroker gives you such kind of facility easily. So let's say I'm just setting my initial equity as 2 lakhs. And I want to run only long only position, because I'm just running like a cash market in India, right? We can, you cannot carry forward short in equity markets. Shorts are allowed only in carry forwarding. Shorts are only allowed in F&O markets. In cash market, only you can do intraday. And minimum shares is 1. And let's say I'll give a percentage commission as like something like 0.1 or something like that. At this point in time, I'll give some arbitrary number, 0.1% as a commission for cash market kind of investing. I'll disable the futures mode. If the futures mode are enabled, you just disable it. And account margin, you can make it as 100%. 100% means full cash. You're buying in full cash. No margins. We're not using any margins over here. Okay, so it's not a margin account. It's pure investing. Short-term investing is what we are practicing over here. And press OK. And ensure that you go to symbols and information. Ensure that you go to the symbol and information tab. Ensure that no lot size, no margin deposit, nothing related to leverage is set over here. And nothing related to futures instrument is set over here. So now I click on all codes. All codes will try to backtest all the data available. And I'm selecting current over here. When I say current, whatever is there on the tab at the top of the symbol box. Notice here, not the box over here, but it is on the top of the symbol box. That is the current symbol, current active symbol. If I press backtest, you see that I'm just pressing on the backtest. Now what is happening here is last 10 years of data. You can see that I'm just clicking on backtest. Hardly will take 1. Okay, it's even before I'm counting 2 seconds, I'm just getting a results for the last 10 years of data. That powerful is what Amibroker backtesting is all about. It's very easy to backtest. Once your rules are crystal clear, the entry price, entry time, exit price, when that condition has been matched, it gives you a complete report of all the trades, right? For the last 10 plus years. That too, with the click of a button, just like that, it gives you the results. And I can go and see the report over here, and I can check how better the trading system is performing. Is the trading system is good or not, or bad? Is it requires any fine-tuning approach? I'll be able to learn from here. Of course, this strategy is profitable strategy, but it is not consistently profitable. I know that. Here you can see that it is not consistently profitable. So what? We can run some optimization and we can figure it out what is the best possible value. Maybe it may not be an 20 and 20 here. Maybe what if it is going to be something like 25? What if it is, if I try with 25? I can try with something like 25 over here. I click on backtest. You can see that maybe a slight improvement was happening. There was a slight improvement in return, slight improvement in winning rate, but still not enough. Still, it is not consistent in making returns. Now, you should also try it out with, if in case you want to have some targets, a stop loss. So those kind of controls are also available. However, we're not going to discuss those controls today, but a lot more controls are available over here You can set the stop loss levels. You can set a trailing stop loss. You can set a profit target. You can set a time-based stop loss. So a lot more controls are available in Amibroker. Now, the best part is you can even fine tune those values as well. Let's say here, the 25 and 25, instead of this 25 and 25, I'm going to give a value to that. I'm going to say like length equals optimize. I'm going to optimize. I'm going to figure out the best values. Let's say I'm going to say like length of the, I'm just defining a value. By default, it's going to be 25. However, still I can vary between 10 to 100 with a step size of 5. So what I'm trying to do is I'm trying to build an optimization controls. I'm just trying to figure out which value is likely to be better. A simple fine tuning. So I can do a simple fine tuning by click on optimization. You can see that it's giving some couple of values over here. So one of the values giving some better results, better risk management. It's giving such kind of results. So what is that value? It is like 85. So 85, if I'm going to use 85, if I'm going to use length equal to 85 here, I'm going to set length equal to 85. If I'm going to set the length as 85, okay, length of the code, length of the channel is going to be 85. It gives some better results. It gives some better results over here. At least comparatively, it is yielding a better results, better profitability. My winning rate improved a lot. Returns are a bit stable, right? At least it is comparatively better. Okay, that kind of, how faster we can optimize. Again, that is like click of a button, hardly 1, 2, just 2 seconds. Optimization is done. Each and every line is nothing but a backtesting results. Each and every line is nothing but a backtesting results. So where you can go and check which is the better parameter. You can go and check it out. Okay, so one among that, what we had chosen is an 85. So 85 is done over here. So it is very easy to choose better parameters. Tomorrow, if you don't know which parameter I should use for my trading strategy, you have to find better strategies. But even if you want to fine tune to figure out which is the best possible value, which will give me optimal results, then a simple optimization function will give you such kind of facility to do from, let's say from 1 to 100, I want to do. 1 to 100 is 100 numbers. So this is from starting number, this is the ending number. I'll say like the step size of 1. Means 100 backtesting I want to do. What if the length is 1? What if the length is 2? What if the length is 3? Up to what is the length is 100. I want to do 100 backtests. I'm just saving the code. I'm just running 100 backtests. I mean, I'm running an optimization. You can see that it's running. Hardly it is taking less than some 7 seconds to complete the backtest. All the 100 parameters are here. Now, among that 100 parameters, you can go and get those best parameters from here. Maybe it could be pointing to the same number, almost 83. It was narrowing to 83, 84, 85 are some of the best results. So I can go with the 85 itself. Not a big deal. So 85 is the channel which is giving me an optimal results in terms of risk, also in terms of reward also. So what I am a bit more concerned over here, I'm just interested in generating a smooth return. Is this strategy is building a smooth return over a period of time? Though it is not a smooth return, but comparatively to the previous information, the strategy is generating better returns from and also better risk also. Earlier risk is not that better, but now the returns are a bit better at this point in time. It also has a profit table as well and a lot more other metrics like profit distribution, max adverse excursion. So all those things, max favorable excursion, max adverse excursion. So these are additional parameters which is currently available only to the license holder. So if you're not having a license holder, maybe you may not get these last 3 boxes. Other than that, all the metrics you can able to get very easily in Amibroker. All right, so this is with cash market. Okay, so this is with a cash market. Settings are very simple. I'll repeat again. What are the settings I had done? Number 1 setting is like Harley. The periodicity is I had done. This is number 1. Number 2, initial equity. Number 3, positions, long or short. Number 4, commissions. That definitely it is a must important. Number 4. Number 5, ensure that futures mode is in disable state. Number 5. Number 6, ensure that account margin is 100% if you are dealing with in an investing mode. Okay, that's number 6 over here. So these are the cash market settings. Now let us say I'll do the same thing with futures mode. It's going to be a very interesting one. Futures mode, there is some more interesting settings that we need to do. Very important setting also. Let's say I'm just running something like in the same strategy I'm going to running in Bank Nifty. So Bank Nifty strategy is going to be same hardly. Let us say I'll try to run the simple backtest. I'm going to run the same backtest, but on a futures mode. So you know that futures mode, we have to set the lot size. Amibroker, we have to explain Amibroker, hey, this is Bank Nifty, this is a future instrument. So this is so and so leverage and so and so lot size. So how we can set the lot size? Go to symbol, go to information, symbol and information. It opens a tab. So you can go and set the lot size and margin deposit. Remember the margin deposit you have to enter in the form of negative number. Negative number means in terms of percentage terms. So if you don't know what is the margin deposit required, you can go and check the broker's portal, check the, let's say something like margin calculator. Go to the margin calculator, check for equity futures, something like Bank Nifty. I'm going to type Bank Nifty over here and get the calculation. So here it's like 17.83%. So which is like, you can either type this number over here, but this number will keep on changing. So rather we can do in percentage terms, it's a 17.83. 17.83, that number I can go and key in over here. You know, recently the number has been keep on bit volatile. This margin deposit, this number 17.83 as a percentage, instead of putting percentage here, I'm just explaining to Amibroker with a negative number. That means 17.83%. Or if in case you want to enter in value, you can enter this value as a positive value. That means to buy one contract, you need so much, so and so money. This margin deposit for the current Bank Nifty value. However, olden days, Bank Nifty used to trade around somewhere around 10,000, less than 10,000. So there the margin requirements will be a bit different. So it's always a good idea to ensure that you are sending the margin deposit with in a percentage terms. So 17.83 is a percentage terms. So if you are not comfortable with that, put some round numbers also. That's also okay with that. If you're putting a higher number, it's okay with that. So 20%, because sometimes right, the margin value will be going up and down, depends upon the volatility. Market volatility is very low. Margins will be very less. If volatility is very high, margins will increase a lot. So a round number, something like Nifty and Bank Nifty, -20 could be a better option. Or if you want to keep it as it is, you can also go back and keep it as it is. There is no harm in doing such kind of things. So we set the lot size. Now Amibroker knows what is the lot size. Amibroker knows what is the margin deposit required for buying one lot of Bank Nifty. Okay, so that is the additional part that we have to do. Now followed by that, I have to go to the settings. I have to go to the futures mode. Maybe I'll increase the capital over here, like say like 3 lakhs. And I'm going to say like futures mode. I'm going to enable the futures mode over here. Now Amibroker knows that yes, it is a leveraged instrument. So this is a so-and-so leverage is required. It requires almost 1.5 lakhs to trade one lot of Bank Nifty. It depends upon the price of Bank Nifty. It calculates the margin deposit. Bank Nifty price varies, it also varies the margin requirements. And I'll go and set the value over here. Let's say like percentage commission, I'm just going to make it like 0.02, kind of an arbitrary number I'm just posting over here. And I'm going to do the only long strategy. If I want to trade only longs, long signal happens, I will enter. Sell signal happens, I will close out the position. That's what I'm going to do here. Though margin deposit is 100, it will not take this margin. This margin is only for equity markets. When it comes to futures market, if you are enabling futures market over here, it automatically refers the margin from the margin deposit. And also it refers the round lot size as well. Now, let's say I want to purchase one lot every time. So how I can say in my code, I can say in my code, rather than saying like in terms of value, I'll comment this line. So I'm not going to use this format. I'll disable it, that particular line with a double slash, so that it becomes a comment. It part of the comment. It is no more the part of the coding, active coding. So here I'm going to set the new position size over here. I'm going to say like, in terms of number of shares, I'm going to say 1 times of round lot size. So 1 star round lot size. See this round lot size, it is in dark black color. That means it's an inbuilt variable. It knows that if you are running backtesting in Bank Nifty, it goes and fetches the Bank Nifty lot size 25. Automatically, this number will be saved under over here. And this time, I am trying to backtest with a fixed lot size. So I'm going to say like use SPS shares over here. Earlier, I was using a fixed money. Every time I'll be parking 1 lakh worth of positions I will try to buy. Now this time, since it is futures, I prefer to use, some people use fixed money here also, that's fine. But here, for explaining purpose, I'm just using fixed number of shares. Okay, or fixed lot size, fixed number of lots. I'm just trying to purchase. Here, I'm just going to purchase only 1 lot whenever there is a buy signal. So buy signal is obviously an indication for long entry, and sell signal is an indication for a long exit. So it's a buy is an entry condition and sell is an exit for the long condition. All right. So we haven't done with the short yet. Once I'm done with that, once I'm done with the backtesting, I'll go and implement the short also. So I click on backtest. Obviously, I'm not getting any results over here. That means still something is wrong with whatever I had chosen. So something, maybe the equity is not enough. So I'm just putting a substantial equity. 3 lakhs is what I'm just pasting over here. I think futures mode is enabled, long is enabled, and 0.02 is enabled. I'll press OK. Right. So the values are here. Now I'll press backtest. Remember, this is a leverage instrument, right? Leverage instrument. Here, this is a result I'm getting. The win rate is like 47.95%. I'll go to the charting section. You can see that it's still not smoother. So maybe I want to make it smoother. In that case, what I'll do, I'll click on optimization. Since we already implemented the optimization function over here, it will be very easy to click on optimize and try to run some optimization over here, try to sort out with better parameters. So you can get some better parameters out of that. Entire 100 backtest, it is doing in less than 10 seconds. 100 backtest, 10 years. That means imagine 100 backtest, each and every variable is 100 backtest. When total 100 backtests into 10 years, that is like thousands of years of backtest. Is doing it in just how many seconds? 10 seconds. So 10 seconds is what all it takes in Amibroker to backtest 1,000 years of data. And on top of that, I'm able to build, and you can see that the length, I can choose some better length over here, something like, maybe this sounds good, maybe something like a number 5, maybe it's a bit interesting. I'm not interested in going with lower numbers, rather I will find this 5 as a bit interesting number. So something like Harley, if I reduce the length to 5, it comes to Bank Nifty, the results are a bit interesting. Maybe here I'll go and check out the equity curve. Maybe the equity curve might be better comparatively. It's still not a tradable one, but it's still a better way of optimizing and a simple and effective trading strategy. Of course, this strategy does only long only, it doesn't do any shorting. So I'll be able to go and check out the results for each and every month. I'll be able to see which month it is profitable, which month it is less profitable. So all those information, I'm able to grab it from here. And this is a simple approach towards hourly, right? So I can go and do it. Instead of that, I can go and try it out in a 15-minute also. 15-minute, I'll try to run the backtest. Maybe if the strategy is working or not, I'll be able to check this out. I'll be able to go back and check out the results as well. So it is much better. 15-minute, the strategy is looking better. both risk perspective, also reward perspective. Also, maybe I can further start developing my strategy from here. Yes, the results are very impressive. Obviously, what is so not important here is like the winning rate. The winning rate is like 35%. Typically, in a trend following environment, obviously, you're gonna get a lot of small losers. A lot of small losers you're gonna get, and you're gonna win the big trends. That's what it does repeatedly. In any trend following system, usually what doesn't matter here is win rate doesn't matter. So some people always look for 60, 77, 85% kind of win rate. That is not possible with trend following systems. Right? So it's a very interesting thing that you should, if you want to become a mature trader, one should start bothering about win rate, especially if you want to become a trend follower. Yeah, it is a bit difficult to digest why I should go and trade a 35% win rate trading system. Is there any way I can improve the win rate? You can try it out, but the more the win rate, if you want to increase the winning rate, then you have to put more and more filters. Sometimes adding more filters will degrade the performance of the trading system. So if you want to add filters, you should add a filter in such a way, right? It should not disturb the current performance of the trading system. Current performance of the trading system is a bit superior, right? So, but at the same time, is it an optimal one? Of course, it's not an optimal one. If you think, then you can again go do the optimization. Since it is on a 15-minute scale, it is taking little more than 10 seconds it is taking to do the optimization. I think some 12 seconds it would have taken, hardly. So it took 12 seconds to do the optimization. And you can go and choose the better parameters out of that. And there we go. We got some results. So among these results, maybe something like 10, a kind of a round number. I always like to get that rather than 6 and 7 and 8. I'll always go with round numbers. So round number, something like 10 is looking a bit impressive and it's giving better values. I'll click on backtest and the results are slightly better and it's a bit impressive also, right? It's better and a bit impressive. If you're not okay with that, you can also fall back. If you're not okay with the risk, you can always fall back to the previous values also. Previous values and the other one, not much of a difference. So in that case, I can fall back with the very old same value itself, where it's not giving much of an drawdowns over here. So it was having drawdowns, but it is not having much of a drawdowns. Drawdown is the risk part. This is equity curve. So here it is all about the equity curve here. We can call this as an equity curve. It talks about reward, how your money is growing over a period of time. And this particular chart, it talks about risk, right? It's a drawdown curve. It's a drawdown curve. Or you can also call this an underwater equity. So it has another name, underwater equity. That means how much risk is involved. It talks about the risk parameters. So how much reward is there? Is the reward is smoother, right? So here, what we have to see from the backtesting result is particularly, is the reward is smoother one? Is the system is generating a smooth returns over a period of time? Generally, people hate surprises. Surprise trading system will be like, it goes something like this. Still, it makes money, but it throws a lot of surprises. So here, there's a little surprises there. Still, surprises are there, but the amount of surprises is still very little. And the equity curve is generating smooth, and it is good in capturing trends. Short trends, it is able to capture a bit faster. And here the drawdowns, big the downtrend, it is bigger the spikes, down spikes, it is more surprise is going to happen. So you know that March 2020, it's all about surprises, because March 2020, that market went highly volatile. So big surprise has been thrown. Other places, the surprises are not much. It's a reasonable surprise. You can see here, right? So these are like, suddenly there was a strategy is getting into loss and then it's recovering from the losses. That's what it means. So the peak loss happened back in March 2020 because of the extreme volatility in the markets. Suddenly an unperceived losses happened, and the strategy had lost almost 1.1 lakh per lot. It had lost, but it had recovered in the same month itself. And what was the loss it had made, it had recovered. And that's what the dip is all about. It dipped and then it recovered back again. And again, it started getting into the positive territory. And again, it started making fresh equity highs. So I guess with this, you have a fair idea now how to backtest your trading strategies in cash market as well as in futures markets. A small promo over here. So we are doing an 75 hours of mentoring program called Quantzilla. So you can go and get those information, complete details around www.quantzilla, or you just Google for Quantzilla over here, you will be able to reach the website. So this is a mentoring program, particularly for the traders who want to learn how to design trading systems and particularly how to implement a complete end-to-end trading solution. So we're going to start from September 6th onwards. It's almost 75 plus hours of live coding learning. And yeah, so what you'll be learning here is you'll be learning about systematic trading, custom indicators, building scanners, how to design your own scanners, how to design your own alerts and dashboards, strategy backtesting, strategy development, building a long short strategy, strategy evaluation, strategy optimization. Of course, there are various ways to do an optimization over here, something like smart optimization, exhaustive optimization, genetic approach towards optimization, and options backtesting, and pair trading, intraday trading strategies. So all those things will be covered under Quantzilla Basics. So we categorize into two categories over here. One is Quantzilla Basic. Another one is you can go and check out the complete syllabus, what will be discussed on each and every topic, what will be discussed. You'll be able to go and check out the contents over here. Anything and everything about Amibroker programming, if you want to learn, then I think I can boldly say, I can guarantee you that this is one of the highly industry standard mentoring program on learning Amibroker programming, and particularly Amibroker AFL programming. And you can ask live questions. It's mostly you can unmute and you can ask me any live questions, all your live doubts if you're having, it will be get resolved in the live sessions itself. It's more of a live coding session. A lot of live experience on coding you're going to get from here. And the end point here is you will be able to design your own trading system on your own after attending the session. Then Quantzilla Advanced, where it's completely about advanced level trade management, position management, risk management, and order slicing, trade adjustments, hedging, and scalping the spreads, multi-leg strategy, arbitrage strategies, and some more quant level trading strategies will be discussed under the Quantzilla Advanced section. It's all about for the traders who want to get into automated trading and more of a live execution implementation. So today we had seen execution only at a backtesting level, but here this Quantzilla Advanced program mostly talks about advanced level execution, particularly when you want to send automated orders to your brokers, how to implement such kind of facilities. Let's say you want to send a straddle, strangle, or you want to build a neutral strategies, or you want to do an option buying strategies, option selling strategies, how you can implement, how you can backtest those ideas, how you can how you can approach it in a completely end-to-end automated manner. What are the risks involved in that? Some of the market internals. So those things will be discussed under the Quantzilla Advanced program. And yes, absolutely can go back and check the complete modules over here. And all those contents will be posted under the webinars channel itself. So webinars will be the platform where you can go and attend sessions live, like how we are attending right now. You can go, or if in case if you want to attend from mobile also, yes, that is possible, right? Now coming back to the topic, now I'm going to add one more thing over here. Let's say I'm going to add as of now, the strategy is only buy and sell strategy. I'm also going to add short and cover also. Simply, whenever the sell signal is going to happen, I want to short also. So short equal to, I can implement short after removing the excessive signal. I'll say like short equal to sell and cover equal to buy. So short signal is nothing but, again, the output of short is also either true or false. Whenever sell signal is there, I also want to short the system. So here I'm going to say like it's an short entry, and then cover is nothing but a short exit the short position. So now the strategy does both long and short. It is capable of doing both long also, it is capable of doing short also. And also the indications I want to change a little bit. I want to change it so that it not only gives a buy and short signal, it also gives a short and cover signal also. Whenever there's a sell and cover signals coming in, it will be indicated with a star signal. Green star indicates a sell signal, and a red star indicates a red color star indicates a cover signal. Let me save it. I'll send it to analysis again. I'll run the backtest here. So, okay, I have to do one more change, and now I have to go to the settings. I have to change it to long and short. I'll press OK, click on backtest, and I can go back and optimize also. Right? So I can go back and optimize, and I can try to check whether am I getting better parameters or what. So what is the best parameters to go through? Maybe I'm just still seeing 10 as the variable here. So maybe 10 is comparatively, but looks better to me, I guess. So yeah, 10 is what one of the round number near to that. What I'm getting is 10, or 50 is the next better round number. I'll say like 10 with both long and short. That's 10. I'll save the code. I'll click on backtest. Okay, so now I'll be able to get the equity curve. It's not that great, but slightly better because the strategy is not making much of a money on the shorts. Very little money is made. So in my case, one should ignore doing shorts with Donchian channel trading system. Donchian channel trading system is particularly not suitable to do short only trades, right? So it's not a good idea to do that. And moreover, in the last 10 years, market went up most of the time. Very few places it had fallen, it had crashed, that too on a macro level, higher time frame like Harley. So yes, Donchian is doing better only on the long only trades. So rather, if you ask me, one should do rather wasting time in shorting these kind of systems, because market nature itself, it is not suitable particularly for Bank Nifty, right? Not for other stocks. Other stocks, it could be different. But particularly the nature of the Bank Nifty itself, index, mostly it will be always in the long mode most of the time. When crashes happens, it happens very quickly, and it doesn't give much of a time to think. So it crashes and then it recovers from there later on. That is the nature of the Nifty and Bank Nifty itself. I've been seeing since 2006 onwards, I've been trading and investing in these markets. So majority of the time market goes up. Yes, market crashes. When it crashes, it can go to any extent. COVID 2020, I mean, when 2020, the COVID-19 when crisis, when it happened, that's a perfect case how faster a market can fall or how deeper a market can fall. But still, it doesn't last longer in terms of time. And so hence these kind of strategies do works good in long only, comparatively, that you can do it in both long and short. So rather one should try to bring it back to the long itself, try to run the code and start using that approach. So that one can simply straightforward, they can go and ignore short trades. Maybe if you're having a different counters, maybe if you think you have to use long and short, in that case, it is worth going long and short. Otherwise, a system which is consistently not bringing any results on shorts, maybe in the future also in the long run, the similar approach is likely to continue, right? So, and moreover, it is not worth doing running shorts, particularly in these kind of models. It's a plain vanilla model. So my final take is like, if you are running downchain channel trading system, it's good to, if in case you are interested in catching the trends, yes, it is a good trend catcher, but you should aware that the win rate is lower win rate. It has lot of small losses, but it doesn't matter. What it catches is when the trend is clear, when the trend is strong, It captures the trend till the end. At the same time, it also generates slow and steady, consistent return. That is the final takeaway of this session here. Let me know if you have any questions. I can answer the questions. So which data vendor to use for Amibroker? Absolutely, you can use like global data feed or true data. Authentic data vendors is what highly preferred. So you can search for authentic data vendor NSE India. You will get a lot of data vendors. And Arjit Das is asking any discount on Quanzilla. And Kishore is saying like he already joined the Quanzilla. All right. So Arjit, if you are looking for any discount, you can check with the team. Or if you're really interested, you can check with the Fevina's team. They will be helping you out. Kishore is asking, can you please show the backtesting settings window? So the settings window is not that complex. It's that plain vanilla and simple. All right. Ganesh Babu is saying, can you use Nifty and Bank Nifty options, in particularly strike price like 16,500 call option? Yes. Maybe in Quanzilla, we're going to give some elaborated approach how instead of using the same strategy, right? So same strategy, how we can use it in futures, but still how you can go and execute in options and what is the importance of doing that. That kind of simple discussion. We're going to do that with the backtesting evidence there. All right, so I hope this session gives you a brief clarity on the importance of backtesting and why particularly to use Amibroker for backtesting and optimization. I showed you like 1,000 years of backtesting has been done within less than 10 seconds. And yeah, we have done both the cash market trading strategies and future market trading strategies as well. A very simple approach, very easy to understand. So maybe in the next week, we're gonna talk more about automated execution. So this time we talked about how we had implemented a backtesting process and a simple optimization process. Maybe if I am going to automate my own trading strategies, so how well I should be prepared to automate my strategies. What else? So we had seen some example on how to build an execution from the backtesting point of view. Next week, you will be getting a glimpse on how you can backtest. What is the difference between implementation of backtesting based execution rule and how we can deploy live execution. Same thing what we try to communicate with the Amibroker, how we can convert similar execution rules to your broker. When signal is coming in, you want to, the touch of the level, you want to send an order. And end of the candle, you want to transmit orders. How to do that? Next week, we will be talking a lot about automation point of view. See you next week. Until then, bye-bye. Thank you.